So welcome to today's seminar on the IMF on its 80th anniversary. Over the last decade, the International Monetary Fund has enlarged the scope of its activities into newer policy areas such as climate change, gender, digital money, social spending, governance, and corruption, going beyond its original and core concerns. While this enlarged scope reflects IMF member priorities and is consistent with the fund's history of adaptation, it has created operational problems given its limited resources and expertise. As new challenges emerge from more frequent shocks and increased geopolitical fragmentation, we consider what the role of the fund should be, its coordination with other international financial institutions, and whether its governance structure is fit for these changing purposes. Today's presenter, Pablo Moreno, from the IMF Internal Evaluation Office, will present the evaluation analysis and will be followed by a discussion by Ratna Sahay from the Center of Global Development. Pablo is currently the director of the Internal Evaluation Office at the IMF. Previously, he was the executive director representing Spain, Mexico, Guatemala, El Salvador, Honduras, and Colombia. And he has held several senior positions at Banco de España, the Ministry of the Economy in Spain, and the President's Office in Spain as well. He has a PhD from Universidad Complutense. Our discussant today, Ratna Sahay. She's at the Center for Global Development. She had a very illustrious career at the IMF. I think her last position was senior advisor on gender to the managing director. Before that, she was deputy director in the capital markets department. She was also a senior advisor to the first deputy managing director, Stanley Fischer, and she held many senior positions at the fund. She holds a PhD from NYU. I'm Alejandro Werner, senior non-resident fellow here at Peterson, and with that, Pablo, please proceed with your presentation.
So, first of all, thank you, Alejandro, and thank you to the Peterson Institute for the invitation, and to Ratna also for participating in today's seminar. So, I guess, have I already shared the presentation?
Yes, Pablo.
Okay, perfect. So let me do full screen here. Yeah. Okay, so the main objective of today's presentation is to talk about the challenges and the debates around the future of the IMF on its 80th anniversary. There are a couple of initiatives within the Fund for the Future and the Bretton Woods at 80 initiative that will be presented next year. And we have contributed to this debate with an evaluation on the mandate of the IMF. So I will elaborate on it and more broadly on the challenges, on the broader challenges of the fund. I just have to make the usual disclaimer. I'm the director of the Independent Evaluation Office. So I'm the evaluator of the IMF, not the IMF, and these are my personal views and not necessarily those of the IMF. So before entering into the challenges of the fund, I think it's important to maybe take a step back and see how the fund has evolved over time. And here, I would like to emphasize three main messages. First, if you wish, the wisdom of the founding fathers. So from the beginning, the articles of agreement of the fund we had a lot of built-in flexibility so that the IMF could decide to engage in new policy areas, and you only needed the decision of the board to do so. And this was the case because there was a lot of uncertainty in the origins on how the world economy will evolve after the Second World War. Second, I will also emphasize that indeed the history of the IMF has been a history of where the fund has quickly adapted to the changing global environment and in a way that it has met what the member needs. Using the lending facilities of the fund, which are the green bars on this table, you can see that the fund created the standby arrangement, which is the main lending facility, and established how the fund lands, basically sequencing disbursements and linked to specific conditionality. But when subsequent crises and member country needs have occurred in the global economy, the fund has quickly adapted, creating new facilities. Starting already in the mid-60s, it created new facilities to address the structural needs, to address the problems of low-income countries, to address specific shocks like the oil crisis or natural disasters or the transition to market economies. The late 90s was about large capital account crisis, or larger financing and upfront financing for the countries that needed it. 2009, after the global financial crisis, there was a complete overhaul of the lending facilities of the fund and the introduction of precautionary facilities, or even more recently, the emergency financing and the financing of climate through the Resilience and Sustainability Trust. And the third element that I want to emphasize is the concept of an evolving core of the IMF. So from a more orthodox point of view of what the fund should do, the argument is that the fund should focus on its core policies, which are fiscal, monetary, exchange rate, and financial sector policies. Now, it's important to bear in mind that this has not always been the core of the IMF. The way we look at the exchange rate system is something that is a reality after the collapse of the Bretton Woods system in the 70s, and a reality of different exchange rate regimes in countries. The fund did not look at the financial sector until the late 90s, when they created the financial sector assessment program in 1999, and it took more than a decade to mainstream the financial sector in the institution. And also within the mandate of the fund included sustainability as part of its mandate, and I will elaborate a little bit more on that later. So the mandate of the fund goes beyond this macro financial stability and has to includes also sustainability concerns. Now, bearing in mind this evolution, I think, in this slide here, I'm trying to summarize what are the main challenges that the fund is addressing on its 80th anniversary. So I would probably single out three of them. The first one is the global commons. So issues such as climate, health, technology, security, biodiversity. The problem is that they introduce exogenous shocks, and they can be simultaneous shocks. So the world economy is a shock-prone world economy, and the IMF needs to adapt its lending to assist the countries when they face this kind of shocks. The second one is geopolitical fragmentation. So here is not only the divide between the United States and China, but I think there is a broader divide that is emerging between the global South and the traditional Western alliance. And then the third one that I will highlight is polarization, which is linked to the second. But I think what I think is important here is that you can have pendulum shifts in economic policy and foreign relations when governments change in the main advanced and emerging economies, and that has an impact in the global economy. So the fund has to take account of that. Now, in the context of these challenges, what are the needs to address them? So you need cooperative solutions, because global public goods is not only more efficient to solve them through cooperative solutions, it's that you cannot solve them without cooperative solutions. You need large financing, huge numbers of financing. Next year in Spain is going to celebrate the financing for the development initiative. The needs for the Sustainable Development Goals are about 3.4 trillion a year for developing countries. And there is an issue of urgency of the analysis. So if you believe that global goods like climate are existential, and I have to say my home country had a natural rainfall disaster only yesterday with 70 people dead and dozens unaccounted for. So there is an urgent need. We don't have time to delay these issues, and all institutions have to pitch in: public sector, private sector, multilateral institutions, and also bilateral governments. Now, against this framework, what is the way forward? Again, I summarize it in three. I guess I like the number 3. It's a nice way to summarize challenges. So the way forward, I will emphasize 3 aspects. First, you need political will. So countries have to buy in their reforms. Otherwise, they just can easily free ride on the decisions made by others. So there has to be a political will to it. Second, I think it's important to focus the efforts on shared objectives. So here, I think the guiding principle should be the stability and the sustainability of the global economic and financial system, and on spillover effects, and maybe reduce the debate around values when you talk about, the values are different for different countries, and are also different within countries because of the polarization. So let's try to find some set objectives based on the stability of the international economic system. And the third issue is that, of course, multilateralism is the best way forward, but it might just not work in every instance, and we might have to accept second-best solutions like, coalitions of the willing, or plurilateralism, which is the way basically the WTO, World Trade Organization, is trying to go. Or maybe you have to accept concerted unilateralism, which is something similar to what the Paris Agreement is doing. You have national commitments that adapt to global commitments, or maybe even in a slower scale, just talk about agreed standards of transparency when you make unilateral decisions, and you have to explain them to the international community. Now, within this framework of challenges, needs and way forward, I think the IMF has important comparative advantages. The first one is there is an institution that is there, of course, and it's difficult to create new ones, but it's an institution that has global membership. It has very important multilateral and bilateral knowledge and expertise, and very important signaling and convening power. So it can bring together the decision makers, those that are in charge of fiscal policies and regulations, and bringing them together to make decisions. It can also play an important role, a catalytic role in financing. Of course, the main focus of the IMF should be on issues related to macroeconomic stability. Now, this will imply changes in all the IMF policies, its surveillance, capacity development, lending, but also on its resources and on its governance. Like I said before, we have produced an evaluation on the application of the fund's mandate. I will elaborate a bit on it later on broader challenges for the IMF. Now, on moving into the evaluation, so I think it's important to bring in the concept of macrocriticality, which is probably a too wide of a concept, again, within the built-in flexibility of the fund mandate. So basically, macrocriticalities are those policies that can significantly influence present or prospective balance of payments and domestic stability. So, I mean, with this broad definition, anything can be macrocritical. And in fact, the IMF has been engaged in numerous policy issues like, inequality, demographics, health, artificial intelligence, industrial policy, etc. And it has specifically developed 5 strategies within the fund since 2012, when the concept of macrocriticality was settled in the institution with integrated surveillance decision. Those 5 strategies are on climate, gender, social protection, digital money, and governance and corruption. The graph on the bottom left of this slide is the number of Article 4 reports, that is bilateral surveillance of the fund, when these policies are included in those reports in at least 3 or more paragraphs in the Article 4 report. So you can see that from the 20s, issues such as climate change, governance, and social spending has been included in more than 90% of the reports of the Article 4 reports of the IMF. The problem that this enlarged scope has created is the operationalization of these new policy areas. And in the evaluation, we frame it in terms of a trilemma between the scope, the resources, and the traction of the IMF. So when you enlarge the scope in a context of limited resources, you are creating problems of overburden on the staff, and you can create also problems of traction in terms of trade-offs with the traditional core policies of the IMF, or in terms of problems of traction in terms of not enough quality, where you don't have enough expertise on the newer policy areas. So the way we propose to move forward from this trilemma, and considering that there is not too much appetite on the membership to increase the resources of the fund, there was an increase in resources in 2022, and that it's politically difficult, that some of these policies are not macrocritical anymore. What we are proposing is what we are calling a spectrum approach, where you situate the different policies within a spectrum that goes from pure signaling, that will be the fund signals, because it has this signaling and convening power, the macrocritical policy at stake, but leaves its analysis to another institution, for instance, the World Bank or the BIS or other international institutions. And then in the other end, you have the traditional core policies with an in-depth analysis of the fund, core IMF expertise, and use of internal resources. Of course, the question is whether or not you're going to add new policies, mainstream new policies to that core of fiscal, monetary, financial, and exchange rate policies. And I would say that there is an ongoing debate within the institution. And I think climate is the one that has the largest support. But I have to say that there is, of course, division of views on how exactly does the fund have to address climate. Based on this, on this spectrum, we propose a number of recommendations. The first one is to have an inclusive, forward-looking strategy for the fund. We emphasize that it has to be inclusive. The countries have to buy in on the policies that the fund decides. This recommendation one also includes an element of a holistic approach. Here's more a technical problem. The problem with some of these strategies is that they were designed at some moment in time with some expectation on what's going to do, but then the decision on the resources to allocate to those new policy strategies were decided on a later stage, and in many cases with fewer resources than were needed in the original policy. So you're creating your own expectation. We're just saying that they should be brought together. There is also a recommendation on establishing high-level principles with international institutions. If you're going to rely in other institutions on their expertise, we think there is an interest in organizing that relation with other institutions. And importantly, there is also a recommendation on the principles of engagement, which are summarized here in the upper right-hand table. You have to define very clearly what is the perimeter, when the IMF has to provide advice, what is the depth of coverage and uniformity of treatment. I think the most important one is the frequency of coverage, which is unspecified, and is creating in the staff the problem as a checklist approach where they feel the pressure where they have to talk about every single newer policy in all their reports. And maybe there is not a need to do it every single year, but maybe you can sequence them better. So this evaluation is mainly about surveillance, but of course, the mandate when it's related to lending and capacity development, it is a subset of what you do in surveillance. So capacity development, fewer issues, and some of these policies, if you mainstream them, then you may want to consider to include them also in the conditionality. But I wanted to move also into broader challenges in terms of the financing and governance of the fund. And I think here the challenges of the global public goods and the geopolitical fragmentation introduce new spins on what are really recurring debates on the IMF. So first, focusing on financing. Again, if we talk about climate, it's going from billions to trillions. They're talking about needs for developing economies that are around $2.4 trillion, well above the commitments that were agreed after the Paris Agreement. So I think that the fund can play a role in this aspect in different areas. Of course, the first issue is the IMF lending toolkit. I think it is very good. It's very good news that the fund approved a reduction of the surcharges for these annual meetings. But there are ongoing discussions on whether the access limits might or might not be enough in a context of a shock-prone world, whether the time horizon of programs is adequate when you have longer-term issues that you have to deal with. And I think there are issues also of the liquidity function of the fund, which never really took off. I think here that the fund there is important experience that has been learned from the emergency financing during the COVID-19 and also with the implementation of the Resilience and Sustainability Trust to finance pandemics and climate that can draw good lessons for the lending toolkit of the fund. Secondly, there is the problem of debt. It has been also very much emphasized during these annual meetings. The level of debt is 100 trillion, 93% of global GDP. There are specific problems of debt, of unsustainable debt in many countries. I think here the fund is taking the right approach. It's going for initiatives such as the Common Framework, the Global Sovereign Debt Roundtable, which is bringing together the new creditors of global debt and trying to find common solutions. The fund is also working on its lending into arrears policies to see how it can keep on helping countries when they are in debt restructuring processes. I will also emphasize the importance of the catalytic role of the IMF. So its catalytic role within the global financial safety net in cooperation with other regional financial agreements and other multilateral institutions. The question I raise myself here is whether or not there is a gap in international architecture when it comes to financing climate. So you need to mobilize huge amount of resources that are both private and public, and probably there's a role for an institution to provide the seal of approval of the macroeconomic sustainability of that financing, and with that seal of approval, bring in the financing for different sources that you need to really confront the climate challenge. Of course, that macro financial stability will have to incorporate in the models the challenges of climate change, and the fund is already working in that direction. And the other element I will emphasize is the use of the SDR. The historic emission of DEX in 2021 was the right call. The problem with the SDR allocation is their distribution. They really go to the largest shareholders who don't need it. So I think there is a need to find ways to try to recycle the SDRs. And finally, with respect to governance, I think the governance of the fund has to adapt probably to the new geopolitical reality. There is this traditional debate on the decision-making of the fund. The fund has been historically a very effective institution. They take decisions very quickly to react to crisis, but they are more weak on representativeness and inclusiveness. I think there is the new geopolitical reality calls for moving into greater representation. There is here some arguments along the lines of converting the fund in a more technocratic institutions closer to a central bank. I'm not fully convinced by that argument. I think that the traction of the fund relies on its authoritas, and in that case, I agree with it, but it also relies on its persuasion. And here, the best way to ensure that traction and persuasion is if countries are involved in the decision-making and in the strategies and in the policies that the funds develop in order to feel engaged and more obliged by them. Otherwise, I think the fund can be easily dismissed as a technocratic, out-of-touch institution that doesn't take into account political economy, or simply as an institution that just follows the interest of a small group of countries in the global economy. Other issues related to governance, quotas, I will emphasize the importance of the 16th General Review of Quotas. Basically what it does, it moves resources from bilateral and multilateral lending into quotas, making the fund a quota-based institution. This is not minor, because when you finance an IMF program with quotas, you only require a 50% majority to approve the program. But if you finance it through lending to the IMF, then de facto you're going up to 85% majority. So I think this is an important move. Of course, the main issue is still the quota realignment. The biggest case is China, with whatever formula or variable or metric you use, is clearly an underrepresented country compared to the weight in the global economy. So there has to be ways in this direction, and the fund is already working on that. They're working on a new formula for next year, and let's see how that discussion goes. Other interesting discussions have to deal with the Council of Ministers. This is an old debate, okay? So the IEO already proposed a Council of Ministers in a governance evaluation in 2008. I think it is important, again, because of the importance of countries buying in. I think the case for a Council of Ministers that sets the strategic directions of the fund probably gains weight in the current geopolitical context. And other issues that have to be with the executive board and management. The fund made just recently also approved for these annual meetings the 25th chair for Sub-Saharan African countries. But there are also some other talks of how the executive board should work. Should it be less executive and more supervisory and strategic? So that will mean reordering the fund's operations. How should directors be elected, maybe for longer periods? Is there room for independent directors like you have in corporations, maybe reflecting the views of CSOs and not necessarily the views of the countries and the authorities? The election of the managing director, should it be necessarily an European? What is the interrelation between the executive board and management? There are some talks also whether or not you should have the system of companies with a board of directors on the one hand and a CEO on the other, or something similar to what you have in the European Union between a commission and a council. There are a number of debates, all of them interesting, and I think the institution will likely have to get engaged in this if it wants to maintain its traction and on the global economy. Let me just finish here, Alejandro, and thank you again, just with two quotes. One of them from one of the founding fathers of the European Union: "People do not accept change unless faced with necessity, and they don't see necessity unless crisis is upon them." Basically, the idea is the fund has been very good in reacting to crisis. The problem now is that it needs to plan ahead. So that requires political will. And second, a quote from the Rolling Stones: "You can always get what you want, but if you try, sometimes you may just find you get what you need." This is more of an optimistic approach. I'm an optimistic person by nature, myself. I think if you engage in the dialogue, the main, the managing director can deal breaks, and the initiative of the Fund for the Future, I think, is a particular one. And if you engage in the discussions, you're not going to get the first best for the different countries, but you might get solutions that are good to face the global challenges of the fund in its 80th anniversary. I'll leave it here, Alejandro, and take off the presentation. Thank you.
Thank you very much, Pablo, and we turn to Ratna Sahay.
Thank you, Alejandro, and thank you, Pablo, for that great presentation. I think it's a really important topic, and Pablo has very nicely painted a broad picture of the fund's evolution and the application of its mandate, and also has made recommendations on the way forward in his IEO report. So during my 33-year uninterrupted tenure at the IMF, I witnessed and I also contributed to the fund's evolution in many ways. Therefore, I'm going to focus on those years and give my perspective as a former insider. I'm then going to comment on Pablo's recommendations very briefly, and I'm actually, now that I'm not inside the fund, I can freely talk about my own opinion, so I'm going to offer a few. So at the outset, I would like to say that I find it remarkable how the fund has responded to the evolving challenges of its ever-expanding mandate and its ever-expanding membership also. So more often than not, the response, as Pablo said, has been swift and effective, even as it has faced increasing budget constraints. So soon after I joined the fund, about 26 former communist countries became IMF members. The IMF collaborated with other IFIs to help the transition economies adopt market-oriented policies and institutions. To facilitate this, the IMF provided loans, policy advice, and technical assistance to build the necessary institutions. So a large majority of the countries successfully made the transition in a relatively short span of time. So at the time, the fund's resources were accordingly augmented to deliver on its new tasks. The next major events that shaped the world's evolution, the fund's evolution, were the 1994 Mexican crisis and the late 1990s Asian crises. Following the Mexican crisis, the fund expanded its surveillance to the capital account as a key driver of shocks. And following the Asian crisis, the fund's capacity to monitor the financial sector was enhanced. So this was reflected in the introduction of the financial sector assessment programs, and this was made mandatory in 2010 for systemically important countries. The macro-financial surveillance was also mainstreamed in country work, but very slowly, as the fund hired new staff with relevant expertise and trained its existing staff. But it took the fund not 10 years, as Pablo mentioned, more than 2 decades to mainstream financial sector surveillance. And in no small part, this was due to budget shortfalls. And I can speak with authority on this one because I co-led the financial surveillance strategy in 2012, when we had asked for 24 new staff positions, and the board approved none, 0 at that time. Then Just before the GFC, the global financial crisis, something remarkable happened. The fund downsized substantially around 2005, 2006. It is no wonder that when the global financial crisis hit in 2008, a reduced workforce was not fully up to the task of identifying the fault lines and possibly helping prevent the crisis. But of course, when the crisis came, the fund responded swiftly and effectively. Everybody worked overtime despite the downsizing. So even as the fund was dealing with the aftermath of the global financial crisis, new priority areas emerged, as Pablo pointed out: governance, social spending, climate, digital money, and gender. So let me just touch upon just one of those areas, gender, because I led the gender mainstreaming strategy for the fund into 2022. So the COVID crisis had laid bare the fact that women were severely and disproportionately affected by the pandemic. The World Economic Forum reported that at current policies, it would take more than 130 years to close gender gaps worldwide. And this was up from about 100 years before the pandemic. So, of course, you can legitimately ask, why should the fund care about gender? And the answer is quite simple, actually. So based on increasing evidence and a growing literature, gender and macro are strongly interlinked. In funds parlance, as Pablo mentioned, it is deemed macro critical. And since it is macro critical, it is squarely part of the fund's business. So for the benefit of listeners, let me just define macro criticality in the space of gender. It simply means that by closing or narrowing gender gaps, everyone benefits from higher, inclusive, and sustainable economic growth, and in some cases, also greater financial stability. So when the IMF board finally adopted the strategy, the shortfall in the approved budget was a staggering 70%, 70. I sometimes wonder whether this large shortfall in resources approved for gender reflected the skewed gender imbalance in the composition of board members. Anyway, on a more serious note, the key point I want to make from what I have just said is that from my experience, since the turn of the century, the fund's member countries were already facing many new challenges with commensurate demands on the fund. But the fund's structural budget basically remained flat in real terms. Looking back, I often wonder how IMF staff and management dealt with the aftermath of the global financial crisis, the COVID-19 crisis, and policy work on 5 new areas without any meaningful cut in other activities. Pablo's report thankfully recognizes this constraint for this period that it covers. With this background, let me now just turn briefly to Pablo's recommendations, my views on those, and my own recommendations. So I have to say that Pablo and his team have done an exceptionally good job at researching the topic. What was pleasantly surprising were the keen insights gained by his evaluation team, many of whom have never worked for the IMF. And I agree with 90% of the analysis presented in the 400 plus pages report, but I have a somewhat different take on 2 of the 4 recommendations that Pablo just made. So on the first recommendation, of course, it is hard to counter the argument that any institution should take a holistic approach to form institutional strategies across all policy areas. However, I don't believe this is a practical solution to define the fund's evolving role in the world. So I disagree that such a report would be helpful. You see, the world is perpetually facing new types of challenges, and the fund adapts as new macro-critical areas emerge at different points in time. So it is impossible then for the fund or any institution to anticipate all the new areas that will emerge at a single point in time. Now, the second recommendation is perfect. I completely agree that producing budget data that allows for tracking policy areas would also facilitate a periodic medium-term discussion of priority areas and budget considerations. In the past, I have to say that both staff and management would periodically propose activities to cut. But due to divergent views and competing interests of board members, as Pablo's report points out, products or activities were rarely cut. So this would leave management and staff in a perpetual conundrum of how to square the circle. So it was not until the current managing director arrived at the fund and demonstrated a strong will to take on the board that the issue of budget augmentation was addressed. But as the evaluation report notes, budget shortfalls transcended across all new policy areas. This inconsistency between the fund's work program and its budget remains an outstanding issue. Coming to the third recommendation, basically what the report says that there's a guidance note that was produced in 2022 across these policy areas, and that it should be updated to enhance and bring in more clarity. So maybe there is scope to update the guidance note, but I would say in 5 years, not now, as staff gain more country and policy experience over time. See, the strategies for the 4 policy areas are pretty new, having been approved only in 2021, 2022. So in my view, there is sufficient guidance currently. I would argue, as in fact Pablo's report does, that there is a tension between general guidance that can apply to all countries and providing detailed policy advice depending on country-specific circumstances. Now, since countries' circumstances are often vastly different when all macro, institutional, structural factors are considered, the guidance note would be at a loss in their attempt to build innumerable scenarios. The fourth recommendation, I don't have much problem with it. I could go along with the idea of adopting a high-level statement of principles for engaging with partners, and it would serve as a good signaling device for staff to actively engage with other stakeholders. But again, one word of caution here. Engaging with partners is not free of costs. The meetings, discussions, agreements, they all take time. So let me now just turn to the last part. What would I recommend? So let me pick on the trilemma on the application of the fund's mandate that Pablo's presentation showed and that Pablo talked about, which is scope, traction, and resources. On scope, I would actually be much more ambitious. I would argue empowering the fund to produce what I would call a global policy coordination report. It's sort of a global Article 4 report. This report would draw upon the fund's multilateral surveillance work, the VO, the GFSR. It would conduct analysis that encompass outward and inward spillovers in a much more comprehensive manner than is done currently. Part of it is presented in the VO. But most importantly, I would recommend that the fund conduct multilateral consultations and policy discussions with key players that have the most outward spillovers, but which would also include what we call spillbacks that each country does care about. So this report should produce recommendations for policy coordination that the executive board, representing a wide membership of 190 countries, should discuss. You see, the IMF is already serving as a secretariat to the macro work of the G20, but the G20 is still not the full membership. I am arguing for the fund to be in the driving seat, not just as a secretariat to G7, G20, etc. And you know, the idea that Pablo mentioned about the Council of Ministers, sure, you can bring that in here, but it should be fully inclusive. And why am I saying that? Because it is going to provide a neutral forum for addressing the economic fallout in member countries arising from geopolitical fragmentation, and it offers an opportunity for discussing cooperative solutions where every fund member at least feels included. On traction, the second point, the second trilemma. Now, this issue, in my mind, is closely linked to the legitimacy of the fund and the uniformity of treatment of its member countries. Pablo's report repeatedly mentions that several executive directors have the perception that the fund is not even-handed in its approach to member countries. In my experience, they are both right and wrong. Right, because indeed some chairs carry more weight during deliberations at the board, which also means that discussions are tilted in favor of advanced economies. But that is by construction, because that is how it was designed when IMF was conceived in 1944. As quota and voice were based on economic importance and openness of member countries. So this clearly meant that in the aggregate, the advanced economies, typically the creditor countries, would carry more weight than the developing countries, typically the debtor countries. But as Pablo rightly pointed out, circumstances have changed substantially. Creditor countries became debtor countries during the European crisis, and many emerging markets became more significant economically than many small industrial countries that continue to carry more weight. Moreover, the idea that the IMF will always be headed by a European and the World Bank by an American also sits uncomfortably with most member countries. Incidentally, this is not enshrined in the fund's Articles of Agreement. So the bottom line is, to be relevant and legitimate, the fund needs to be genuinely inclusive, and therefore quota and voice reforms are long overdue. But the executive director's perception that staff favor some chairs more than others is not quite correct. And don't forget that staff are also quite diverse and they think differently. If there is a perception that staff respond more to the chairs that have higher quotas, it's possibly because they are asking more questions. In the case of the gender strategy that I led, I vividly recall the opposite. We spent much more time answering questions and incorporating the concerns of board members representing emerging markets and low-income countries, which tended to have larger gender gaps. And finally, on resources, and this is the last point I'll make, the board should consider producing a comprehensive review paper, say every 5 to 8 years. So it's a review paper, not a forward-looking paper. Perhaps in the context of a medium-term budget paper or the periodic comprehensive surveillance review to discuss the fund's existing priority areas and trade-offs, to actually eliminate work that is no longer needed, and then to assess if the approved budget is consistent. If more resources are needed, the board should be prepared to approve them. And if in the future the board formally agrees and approves a new strategy for a new policy area, it should also approve the request for additional budget. This notion that staff should somehow accommodate increasingly more work is neither sustainable nor fair to staff. And it could also compromise the effectiveness of the fund, as we saw just before the global financial crisis. Thank you very much.
Thank you very much, Ratna. And before turning it back to you, Pablo, I mean, obviously in your presentation and Ratna's presentation is very clear the trade-off that when you were at the board, you have to decide on increasing the objectives and the mandate of the fund or expanding it, maybe reducing the effectiveness of the fund, but at the benefit of achieving some important effect for our membership, and how we judge how the board judges that trade-off, especially in those occasions in which there are other institutions that are also pursuing those objectives. So it would be nice to listen a little bit how was the division of responsibilities, let's say on climate, between the World Bank and the IMF decided? And do you think that's the right distribution of responsibilities? We never got into that type of discussion regarding education or health, etc., that are also macro-critical, etc., etc. And that discussion never take place. That was done across the street, and the fund did not get involved. And I think we can make a similar argument of its macro-criticality, the stability of the financial system, etc., etc., etc. And finally, on another distributional issue, I mean, you mentioned surcharges. Was there any discussion when this was brought to the board of maybe doing a slightly smaller reduction of surcharges and financing and expansion of our capacity to deal with these subjects? So when we look at finances, I mean, this issue of capacity, building capacity, investing in a more diverse set of expertise, vis-a-vis reducing costs for 20 countries of their financing. Was there ever a discussion of that? And with that, I'll close. I'll give you have, let's say, 5 minutes, and then we'll open up to the questions that we have from the floor.
So thank you, Ratna, and thank you, Alejandro. Maybe just a few reactions to your comments. So, Ratna, on the forward-looking strategy, I think again the spirit of the recommendations is that the fund has had the addition of newer policy areas on the fund has been a piecemeal process. So there is an additionality of new topics, and there is, that is creating burden in overstretching the institution. So basically what we're saying is, okay, maybe you can take a step back, see what is all the areas that you're doing, the pressures that you're creating in the institution, and then decide how to move forward. And that's why we propose this spectrum approach. Maybe some of those can go more into signaling, others more into core, and others more somewhere in the middle. So that's the basic idea of the recommendation. I fully agree with you on your own recommendations. So on multilateral consultations, that was an attempt already in 2006. It failed, so it might be recovered. It's interesting that you raised the issue of downsizing of the institution in 2006. I remember back then the debate about the fund was not about the future of the IMF, it was about the irrelevance of the IMF because the institution, we were supposed to have finished.
That's correct.
Crises were not there. It was the end of history, and then, of course, the global financial crisis came, and that debate was completely gone. On traction, I think this is. I think I fully agree with you on that one. No? So it's basically you have to engage. I think the approach has to be political, highly political. You have to engage the countries in the strategies in the decision making, because otherwise they will not buy in. They will not feel obliged by them, and I think that's key. Not much comments on resources. I mean, you also made the same comment before. I haven't followed the specifics of the debate on surcharges. I don't think that consideration that you're also making, Alejandro, in terms of whether or not, I think the discussion was about, have you gone enough in reducing surcharges? That was more the debate, rather than thinking how to use those resources to increase the resources of the institution. There was, like Ratna was saying, it is a flat budget. There is still in the process of 2022 a structural increase of 6%, which is supposed to last. Last year it was designed for 3 years. So they still have to wait for that structural increase to go over, to materialize, fully materialize. In financial sector, yes, it took probably more than a decade. I was just thinking from the time the FSAP was created in 1999 until it was made mandatory in 2010. So that was in a decade. But then, of course, the financial sector, there were a lot more issues. And on your question, Alejandro, on cooperation with other institutions, I think that's a key part. That's the part where we're talking about the signaling. The IMF should rely more in other institutions. There are some problems there, though, because of the way the fund functions, it is not so easy to rely on the analysis of other institutions. So there has to be some in-house analysis, but I think that should be reviewed. And specifically on how will the fund cooperate on climate on the fund, I'm going to defer to the evaluation that we are conducting right now on climate, and that is precisely one of the issues that we look at, how the fund cooperates with other institutions on climate, not only the World Bank, but especially the World Bank. Thank you.
No, thank you, Pablo. Let me read you the 3 questions that we have, all of them, and then you respond to them. And if Ratna wants to chip in at the end, that would be very welcome. So first question, has over time the IMF been able to gain more independence from larger Western countries? That's the first question. Second, in terms of improving governance and coordination on macro-critical topics on which the IMF may not have the greatest expertise, is there a potential benefit to a more active and engaged joint IMF World Bank IMF IBRD Development Committee? I like Ratna's ideas that the fund should promote policy coordination, yet the word coordination could put some countries in a defensive position, the US the first, as they are increasingly allergic to compromise their domestic policies. I would suggest shooting for a more modest promotion of policy coherence aimed at maximizing positive spillover. And I think we have a last one. A final one that is too long. The governance structure of the IMF is in principle geared towards ensuring a balance of alignment with the articles and flexibility and adaptation demanded by the membership. But it seems that it does not work that way, as the board has a hard time to provide oversight to the institution and constrain management discretion. The creation of the IEO is supposed to also help the board in this way, but the IEO is too close to the day-to-day work of the IMF. Independent think tanks such as Peterson, Bretton Woods Committee, Chatham House are too distant. Is there a space for an intermediate institution to provide advice to the board and the IMF, and that looks at governance and new issues, or some complement to the IEO? And we close it there, and I turn it back to you, Pablo.
So thank you, Alejandro. Some of them difficult questions. So in terms of the independence. The independence of the IMF from large shareholders. So, I mean, we all play a political. I was in the board for a number of years. We all play a political game. The fund is like a huge snowball that you have to move it, and of course, the largest hand is of the largest shareholder, which is the United States. Well, the largest hand is probably the managing director. I mean, there is a lot of issues that the managing director, and we say it in the evaluation, has a very important role in guiding where the institution goes. But there are different sizes of hands. The largest is the US, but everyone can play the role. So I can say that, you know, different countries have played, and different groupings of countries within the board have played an important role in moving the policies of the IMF. But we should not be naive. There are different weights, and we have to play with them, and that's the reality of geopolitics. And that is why I think that governance, in order to keep the multilaterality of the institution, the governance of the fund has to be increased. And I think that, yes, it has evolved. Historically, it was an institution that was more influenced by the G7, and it has improved over years. I think an important element here, and this goes back to some comment that Ratna has mentioned, is there is more, the IMF has really improved in inclusiveness. I was in the board in the early 2000s. You just came to the board with the policy decision already decided, and then you basically approved it. When I came back in 2018, there were different procedures in the board, informal engagement with the board and with all the executive directors, with the stakeholders, where you have more say in influencing where a policy of the fund goes. No? So back in the early 2000s, it was more informal engagement with the large stakeholders. From it, when I came back, more engagement of all the parties of the executive board. The other one, promote policy coordination, policy coherence, etc. I think this is the spirit of the issue that we were also talking about before, and multilateral consultations by Ratna. So here, look, the IMF really doesn't have hard traction. So in lending, of course, because you have the conditionality. But in surveillance, the most that you can aspire is to comply and explain. I mean, the IMF, the way it's not is not an institution that has a lot of traction on the policies of the large advanced economies. So if you want to reinforce that policy coordination, I think that you need to make those governance reforms, maybe the Council of Ministers, and make the countries feel engaged in the policies and the objectives of the IMF moving forward. And here there is an important discussion for whether or not there is an issue of merging or combining the IMFC and the G20, which are two bodies that have different memberships, and you know there is a debate ongoing on whether or not that can be done. Mandate, you know, the IEO. I mean, this goes to the heart of you have different types of evaluations. You have internal self-review evaluations within the institution. You have fully external evaluations from think tanks or academics from the IMF, and the independent evaluation of the IEO, which is a standard that is set in all the international financial institutions. The first one was the World Bank more than 50 years ago, is precisely to provide that kind of analysis that is mindful of what is possible to move within the institution. So you have to have some knowledge of how the institution works inside. The rule that we have in the IEO is that more than 50% of the staff has to be from outside the staff, of the fund. So I think you know, there are different sources of evaluation, and I think the governance is of the IEO works well. But in any case, we are reviewing our own evaluation policy, because we have an external evaluation on the IEO, and we will be delivering a new evaluation policy mid next year. And these are issues that we can address. We may consider. And finally, on governance, and I mean, it's not only governance, it's more generally these newer policy areas. Indeed, you have to, and you were mentioning it, Alejandro, as well, as you do have to rely on the expertise of other institutions. The problem is that you need to articulate, I think, some coordination from the top down, so that there is an institutional culture that can be done. The problem with those coordinations is that sometimes, a lot of times, are done in an ad hoc basis, whether based on informal relations, and there are not clear incentives within the institutions to cooperate with other institutions. So you need to create the right incentives internally. Thank you.
Thank you very much, Pablo. Ratna, if you want to close with the final 2 minutes.
Just two comments. Thanks very much. You know, so the first, what Pablo mentioned about how to engage the board and how it has improved over time, I completely agree. I know because I've gone to the board many times before and more recently, and these informal board meetings are extremely useful to hear their views before anything is formally adopted. But I also want to say that it's not just that we have an informal board meeting. We actually meet every executive director before, you know, at least in the context, I'm giving you my example of my gender strategy or financial surveillance strategy. So that really helps in terms of board members feeling that they've heard, and they also see in the end the comments that they made are reflected in the final paper. And the second thing and the last one, it's a question you asked, Alejandro, and there was also a question of division of labor. So I'll give you the example again of the gender strategy. What we did was, and you know, as soon as I came on board, I got in touch with all the gender leads of about 10 regional institutions and World Bank and ILO, etc. And I understood from them they already had a working group. They just added me on. And we would meet. We actually organized a conference even before the paper came out. So having one contact point already made a huge difference, which the current senior advisor, Rishi Goyal, is in touch with. They participate. And so one really, it's a very efficient way of functioning. But when it comes to the division of labor, I'll just give you an example. So for example, if the policy advises the only way you can increase female labor force participation is by having more daycare centers, that's where the fund stops. And then we get in touch with the regional institution and say, hey, help them devise. We don't know how to do it. We meaning the fund when I was there. So that's how we try and divide up the work. But I do like Pablo's presentation of, you know, from a signaling. There's a whole spectrum of ways to engage. And indeed, in the case of the gender strategy, if we applied macro criticality, we would cover virtually all the countries. And it's impossible to do it. So we had a practical approach. Let's look at the largest gaps, and also let's see where the traction is the most. Even though macro criticality means we have to at least alert the country, and that you can just do by a signaling device, just raise the issue when you go on a mission. So let me stop there. Thank you.
Thank you very much, Ratna. Thank you very much, Pablo, for a fascinating discussion on a very relevant topic, learning from the past 80 years to think about the next 80 years and how the IMF can remain as relevant as it has been for the world economy in these first 80 years. So thank you very much. Thank all your team for the report, and both of you for an extremely engaging presentation.
Thank you.
Good afternoon.
Bye-bye.
Bye.